Thank you guys. Thank you for joining me on my channel again, michaelmartinsfx. I'm super excited again that we are moving significantly progressively. Congratulations for as many of you that are joining me. I've been obviously watching our videos, liking and sharing the videos. We are seeing your handwork, we are seeing your impact. I want to say thank you. The more you like, the more you share, the more YouTube is suggesting others, and the more we are basically being encouraged by through the YouTube algorithm to produce more of this. So guys, thank you. If you're again, in case you are joining us for the first time, this is Michael MartinsFX. That is the name of the channel, and across all our social media, from TikTok to Instagram, Michael MartinsFX. You want to obviously follow us on this and obviously encourage us by this. Today we're going to be looking at a very important topic as well. We are moving into the advanced level, guys. So congratulations to you. I'm super excited. So let's quickly get into it. Today we are looking about a very important topic. Like I said, this topic is something that you don't want to miss because we are now moving into the advanced level. Technical analysis. Last time on a previous session we talked about different types of analysis. We did talk about the fact that analyses are just like rituals that the forex trader, professional forex trader, they carry out before they make a decision in the market. And these rituals enable them to be able to make a decision as to whether they are going to be longing or they are going to be shorting in the market. And when we say long, we talk about buying. When we say short, it means selling. So in case you have not seen any of this video where we talked about the forex trading terminologies, we talk about the meaning of all these terminologies: shorting, longing, flats. You want to go back and watch. Don't forget, every video we have on this channel, they are tied together. Okay, it's tied to the other one, so you cannot afford to miss any one of them. So today we want to dissect the meaning of technical analysis. We did say, however, there are 4 types of analysis. Before I proceed, I normally will advise you, in case you are joining us for the first time, whenever you join this channel, make sure you have your pen, make sure you have your book. I have my pen and I have my book right in front of me because it is educational. Everything we talk about here, they are educational. So you must make sure you come with these things. So we talk about 4 types of analysis. We talk about the fact that we have the technical, we have the fundamentals, we have the sentimental, we have the situational. These analyses, they inform your decision as to whether you are going to be longing, that's buying, or you're going to be shorting, that's selling in the market, or you're going to remain flat, doing nothing. Okay? Because you don't have to trade all the time. Depends on what you are seeing in the market. Okay? And we did say that those 4 analyses do not need to always be carried out together for you to make a decision. That sometimes, guys, you get into the market, you just realize that, okay, there's no impact news today, high impact news today, which means there's nothing, no reason for any, fundamental analysis to be carried out, because fundamental analysis basically has to do with what? The high impact news in the market. Okay, so and then in that vein, we are just going to be concentrating more on technical or sentimental or situation. Okay, again, we're going to talk about each of them. So today we are talking about technical analysis. So what is technical analysis? Let's get to it. So for our taking time again to prepare this slide so that we can seamlessly follow through our conversation around these topics. Okay, so you want to make sure that you follow suit as well. Now, key points we need to know. Okay, and today is going to be a bit of movement. We're going to be shuttling between our presentation and our charts. I'm going to be taking you to our trading view terminal where we make this analysis. Okay, so you see how we do these things. But we are not going to really be going deep into technical analysis because we're going to be having a full session for these things where we're going to be breaking down the factors you need to consider. But right now, we're just going to be talking about how we just, on the surface, how we just do these things. Okay. Key point number 1. Let me grab my highlighter. Okay. Key point number 1. Technical analysis involves studying historical. Where's my highlighter? All right. Here we go. Technical analysis involves studying historical price data. Take note of this. Price data and chart patterns in order to forecast future price movement or price actions. Okay, so technical analysis is more consistent with price action. So when you look at historical, because there's this thing you must always understand if you want to be a professional and profitable forex trader, you must understand that price always repeats itself. Market always repeats its behaviors in the market, and the reason why we can easily be able to say we want to project that this market is going to speculate, rather that this market is going to buy or is going to sell. Okay, so if you look at what we have on the board here on the screen rather. So what are we saying here? we are saying that traders use various strategies. Okay, when we talk about technical analysis, we are talking about the level of the type or different type of strategies that traders are using in order to be able to embark on this type of analysis. Okay, the strategies such as trend lines. So when you look at this chart, guys, look at this chart. These pictures we have here. Okay, these pictures we have here. Sorry, my phone rings. So my phone just rang. So now these pictures we have here, guys. All right, we have a picture of a trend line. Okay, so this line you are seeing here, this line, guys, it is called a trend line. Okay, this is called a trend line. Don't worry, we're going to take it to our chart so you can see. Okay, trend line, just as the name connotes, trend means that trend of a thing, the movement, how it's moving. When you look at this picture, guys, you can see that the chart is moving this way, upward, but in a sideways, but upward. So on that vein, you can easily denote that whenever price comes to this type of the bottom of the chart of the line, it does what? It tends to go up. When it gets to the top, it tends to come down. When it gets to the bottom, it tends to go up, and all like that. So this is how price moves. So price moves in the waves, but upward. Yeah, that's how price moves. And that's what you can see here. So understanding that price moves in the waves. So once you're able to understand or detect this type of trends in the market, okay, what we just need to do is to draw our trend line across it that way. And then we draw the trend line. Okay, once you're able to see first, second, then we'll be projecting and speculating that if this has happened the second time and the price respected the trend, it means that when it's coming back the third time or potentially the fourth time, it's still going to respect it. Immediately, we quickly draw your trend. So, guys, remember when you are drawing your trend, you have not seen. Let me do it properly, guys. So when you are drawing your trend, remember you probably have not seen some paths. Okay, maybe this is the path you have just seen in the market, right? And then you quickly put your trend. So 1, 2, okay, 2. So you quickly, and then you saw it coming down here. So you will quickly put your trend line across like this, right? And then maybe the price was still on this level, at this level that time, right? So what you are expecting or projecting is that if price had respected in the first year and the second year, you expected that price will still respect this trend at this point. So as a technical analyst, okay, or forex trader, what do? You come here after observing the price action here. We're going to talk about all that because it's not just enough for you to just come and say, oh, once it comes there, you're going to buy. No, you have to observe some price actions, the behaviors. That's what we call price actions. So price actions, just like what we have here, means the behavior of price at a particular junctions. Okay, so junction. So when you observe the candlesticks that the price actions or action is coming up here, then you quickly place your buy here, and they expect that as market comes here, behaves here, then it goes all the way up. Okay, just like what you can see here, guys. Can you see now? These are what we call price actions. You can see behaviors of the price here. Okay. Yeah, we can see doji here. We can obviously inverted hammer there. So all of these things, they are price actions, telling you that price want to reverse, and you quickly place your price, and they expect that it to come up again. And then when it comes there again, you observe another price action, expecting that, okay, price will come down again. You place your sell, that's your shorts, and then you expect price to come down from here again down. You see now? So all of these things are what we call the technical analysis rather. These are what we call technical analysis. Okay, so part of the technical analysis is the use of trend lines. So this is what we call trend lines. Okay, and that's what it says here, guys. Okay, such as trend lines, moving average. We're going to look at moving averages again here. Moving averages, support and resistance, and indicators to identify what entry and exit points. You see now. Okay, so you use this to identify your entry and exit point. That is the second point. Our third point here. So we talked about technical analysis. What involves the use of price data. Okay, historical price data. Remember when I said that once you have noticed that price came here, respected the resistance here, and it came up here, support here, respected the resistance here, and it came down here again, and respected again, it did the same thing here, right? You know, you had no knowledge of this event at that point, because when this thing was happening, you didn't know what was going to happen. But the moment you saw these actions here, you saw the price actions here, that informed you guys that similar behaviors will happen in the future activities. So this one to this one, this is the historical price data. Okay, that's what we call historical price data. now to forecast for the what? The future, to forecast for the future price movements. That is exactly what we are talking about here. So from here now, you are not forecasting that price will do the same thing here. When it gets here, it's going to do the same thing here. That's the future price movement. So this becomes historical, and this becomes your future price movement. Hope that makes sense, guys. We're going to go to our chart. You see how we do it again, just on the face of it, because we're going to be having a session where we're going to be talking about how we actually trade. Okay, good. Now, the third point again, trader use this method to know, let's go over it again. Traders who use this method are known as technical traders or analysts. Okay, that's some people, that's the only thing they use to trade. Some people use support and resistance, some people use indicators. No, take note, guys. Support and resistance, trend line analysts, they tend to follow similar trends, because you can say, guys, this is your support and this is your resistance and this is your support. This is your resistance and this is your support. So the support is that area of the chart where price refuses to go down. Okay, that price that refuses to break down. Rather, each time price gets there, it tends to what? Go on a buy. So that segment of the section of the chart is called the support. So you can say this is your support, this support, this support. Okay, so price comes here at the support, you respected your support. So it's like a floor. Okay, while the resistance is that upper chamber of the chart, or like a ceiling, that price, whenever it gets there, refuses to break up. Okay, so this top is a resistance, like a ceiling. So they have similar arrangements, similar behaviors when it comes to trend analysts and moving average and the technical, and the support and resistance. That's what I wanted to say. Trend analyst trader and support and resistance trader, they follow similar trend. So with the support and resistance, it's just when you have like a straight line here, straight line on top, then when it comes there, it respects, it goes up, it comes back. That's support and resistance. Why the trend line is of this nature. So you can see that it has similar behaviors. It comes to the top, it respects the tops, it comes down, respect, and all that. Okay. So so the next point on the chart on our slide is they believe that all relevant information is reflected in the price, making it possible to forecast for future price movements based on the past data. Okay, so let me clean everything we have on the chart now, so this chart can be readable. Okay, so I will not take you I will take you to our trading terminal so you can see what we've been talking about here. Okay, all right, so now let's go to our trading terminal. Let me wipe this up first and then we'll move to our trading terminal. Now let's go to our trading terminal so you can see what we're talking about. Remember what we talked about? The use of what? The use of trend line, moving average, support and resistance, and indicator. Okay, we're going to see as much as we can just quickly cover using any of these. All right, so let's look at this. What we have here, guys. Now you can see our chart trading terminal. Now remember we talked about indicator. So this is indicator now. This is already preset. It's preset for you guys. Now we're going to have a video where I'm going to be showing you how to actually set up these indicators themselves. So this is moving average. Okay, so we have the fast moving average, which is the 10. So this one is the 10 moving average, and this one is the 23 moving average. Don't worry, guys. I'm going to show you in the subsequent videos, one of our videos subsequently, how to set this. Okay, but what I just want to show you is how to use the indicator itself. Okay, so because you have to set these ones. Set them in place, then you start using them if that's your own strategy. Okay, I have a couple of strategies. I'm going to be showing you all this on this channel, so just calm down. You're going to learn everything free of charge. Okay, these things will usually cost you thousands of pounds to learn out there. Now we have the 10 moving average, exponential moving average, then we have the 23 exponential. So you can see the settings here, 10 and 23. Okay, that is actually the settings. Okay, so and then what we are doing now is that whenever the fast moving average, which is the 10, crosses the red one, okay, the red moving average, which is the 23, then we are going to go on a buy. So whenever it crosses from the bottom, it means that the price is going up, just like what you can see here, that you can see it's moving up, right? You can see price moving up, isn't it? So that's what we are literally talking about. So whenever we see the crossing like this one, you can see the crossing here, right? Let me clean, so I don't want to pack up this so you can see what I'm doing. So you can see the crossing at this junction, yeah? Whenever it crosses, the blue one crosses, which is the 23, the 10 one, the fast moving average, crosses the 23 one, which is the slow moving average. then we are going to be buying. So you can see exactly what happened. Immediately it crosses, you can see price keeps going up, going up. So as an indicator trader, right, I can say whenever it does that, then I'm going to be buying. So I will just buy and wait for price to retrace. Once it retraces back, then I'll just buy again. So I'll just put my measurement tool here. Okay, all of these things, guys, don't worry. I'm going to teach you all these things, how to do all these things. I'll just put my measurement tool here. So I'm going for ratio 1:2. Right, guys, you can see the market retraces back, and then boom, that's it. Hit our take profits. The same thing, I'll come here again, do the same thing, set my indicator, and that's it. Take profit. This is one of the trades which I took right before the weekend we closed. You can see it's in a massive profit, almost hit our take profit. This is where our take profit was almost hit. The expectation is that price will go and hit it once we resume back on Monday. Okay, now that is indicator. That's on a buy. On a sell, the same thing. Let's look at the similar behavior when it crosses down. So when the blue line crosses down, remember on a buy, we said when it goes up, right? But when it crosses down, look at it here, guys. What do? We sell. So invariably, what we just need to look at take our measurement tool as well. We'll go on a short, we'll put it there. That's it. We'll go on a short, 1:2. 1:2 enables you to be able to manage your risk. All of these things we're going to be talking about on this channel. That's what makes you profitable, not because you can analyze, because you can manage, you know how to manage your risk. So you can see price moved it, hit our take profit, and then we come here, we can draw 1:2. I'll look at price again. Whenever it retraces to the blue line again, it goes down. We enter, we sell. It goes down. We enter, we sell. And it goes like that. So all you are just looking at or looking for is whenever the blue line crosses the red line from the bottom up, you buy. When it crosses down, you sell. And that is just what indicator traders, that's what they do. Remember, there are other factor price actions that you need to consider, candlesticks, before you just jump into it, right? You will not just jump into it. All of that we're going to be discussing on this space. That's why you want to lock in, okay? So you don't miss out on anything we are going to be talking about. So that is indicator trader. So if we talk about support and resistance trader, so let's look at that, okay? Remember, trend line or support and resistance, that's what we say a technical trader, the traders they use, right? Now, when we look at the trend line, so let's look at a behavior here and see if we can use the trend line, okay? So let's look at, guys, let me delete this one so that we are not packed up with so many diagram on this chart. Now, trend line, remember trend line, we can see, guys, that price has been moving up, creating higher high and higher low, right? Higher high, higher low, higher low. All of that, don't worry, we're going to talk about that. Once you see price as creating zigzag movement like that, remember I said to you last time, that price does not just move straight. Most time price move in a zigzag. You can see higher low, higher high, higher low, higher high, higher low. So what do? You just draw your trend line. You can see, remember the example we had. I'm just going to delete this one. I'm going to use a proper trend line from our this thing. So all you just need to do, draw your trend line. Oh dear. All right, so let's draw my trend line from here. Okay, draw your trend line. Remember the example we have in our slide that we just came from now. You see now. So what are you effectively saying? In a nutshell here, that whenever price comes to my trend line, it reacts, right? Let's look at it. Price came here, it went down. And price went all the way here. It came down, even though it did not finish the circle. It came here, now it has come down. What is the expectation? The expectation is that as price came down here, after some price action or so, price will go up again. So what do I want to do as indicator trader, trend line trader? I will put my measurements and then I will go on a buy house, expecting that price will come here, right? After price action, to go back up. That is trend line trading. Okay, I hope that is making sense. I said to you that we are progressing, we are making significant progress. So, and that is the use of trend line. You see the way I just drew my trend line now, and then analyze the market and jump into it. And that is what we call technical analysis. So support and resistance. Remember when I said to you that trend line and support and resistance, they have some similar characteristics. Okay, so let's look at an opportunity where we can say trend line and support and resistance may play out. Okay, so let's look at this. Okay, let's look at this. So price came here and then it gave us this. So we can say gave us this resistance. Okay, So we can say, right, from what we can see at this point, price came here, support, this is our resistance, and then hit here, this is our support. So from here, price respected the support, it went up, came here, and then price actually broke into our support here, right? This is a resistance, let me say. So this is our resistance, and this is our support. Price respected our support, and went back, respected our resistance. It came here, obviously violated our support here, but it went back to respect it and went back into the support, into the resistance here. And again, respected the resistance, came back into the support, respect the support again, and went back, and it break into, right? Because not all the time, guys, that price will just do exactly. But that is why we are saying that it's not a strategy on its own. You have to combine it with the price action. So when it comes to the support, you have to look at the candlesticks that are being displayed and ask yourself, is the price going to go up? So if it's going to go up, all you just need to do is to pick your measurement tool again, go on a buy, and then do the same thing that we'll be doing and expect price to come here. Okay? And that is basically it. You can immediately price came here, respected this, and it went back into the zone, right? A technical analyst trader will say, okay, price literally is respecting the zone again. And then after this and the price action we can see here, right? We'll just go into a buy, right? And that's what we see, we say when we talk about support and resistance. There are a number of examples. If you look at our chart, we can see literally a number of examples that we can talk about here, right? So let's see if we can see another example before we call it a day on this session. Okay, so let's go, let's check what we can see here. Let's go all the way back. Remember, we're talking about using the historical behavior of price right now. So let's look at this one, guys, right? This is another example we can look at. So price respects our supports here. You can see now, this is a very perfect example, very good example. Now, each time price comes here, look at, respect the support, respect the resistance, respect the support, respect the support, and it broke our resistance here, right? Turn the resistance into a support before moving up, right? We turn our resistance now into support from here, then moves up, right? So you can see, so once you know that price respected your supports here, what do? You wait for price to come back. You can see this pin back, right? This is sort of the candlestick behavior you look at before you place your decision, before you place your position. So this already tells me that price was going to go up here. So what do? I just take my measurement tools again, long, come here, put it as well, just like what I've been telling you, come here and set your position in place, right? That's it. So that is what we talk about when we say the use of technical analysis involve the use of trend line, support and resistance, indicators, and many more. Okay, let's go back to our chart. I hope this makes sense to you. So when you say you are a technical analyst trader, that's what we're talking about. So until I see you on our next session, I remain Michael Martins. If you have not subscribed, make sure you subscribe, share, turn on the notification bell rather, and share and like our videos, comments, so that it can help us to improve, and share so that YouTube can suggest this to others. And this algorithm will obviously motivate us to do more. So thank you for your time once again. I'll see you on our next video, right? I'll see you. Bye, guys. Bye.